Hello and welcome to the News Radar. We're starting with the latest developments in global financial markets. European markets are seeing gains, while Asian markets are under pressure due to rising trade tensions. European stock markets opened slightly higher in the past hour. Main indexes in the UK, Germany, Spain, and France all gained between 0.3% and 0.7%. On Thursday, they recorded their steepest one-day percentage gains since 2022. The situation in Asia was less positive. Uncertainty around former President Trump's tariffs affected markets there. Japan's Nikkei closed nearly 3% lower. Many investors are turning to gold, which is seen as a safe investment. Its price hit a record high on Friday. The trade war between the US and China has escalated. Washington confirmed tariffs of up to 145% on Chinese goods. In response, China imposed tariffs of 84%, which have now been raised to 125%. Former President Trump told his cabinet on Thursday that a difficult transition period was inevitable, but insisted investors were pleased. He said the markets had a big day and that despite transition costs, the outcome would be positive in the long run. On China's side, the sentiment is that once tariffs go beyond 100%, the exact number becomes less significant. It's already too costly to sell goods into the US at that point. The move is seen more as political pressure than economic strategy. Meanwhile, China is actively engaging with other countries. While Trump has been vocal, China's president met with the Spanish Prime Minister and is scheduled to visit Malaysia, Cambodia, and Vietnam, countries also affected by US tariffs. Chinese officials have also been in talks with their counterparts in South Africa, Saudi Arabia, and India. Separately, China and the EU are reportedly discussing removing tariffs on Chinese cars entering Europe and replacing them with a base pricing system. These developments show that China is exploring other options. The idea that simply applying high tariffs would force Beijing to back down has not proven true. With the update from Beijing, the new 125% tariffs on U.S. goods are expected to take effect starting Saturday. Some analysts believe that with tariffs at this level, it's almost impossible for companies to sell products in each other's markets and still make a profit. The damage to U.S.-China trade has already been significant. There's been speculation about whether China might take additional measures in response, ranging from economic to cultural, such as limiting imports of U.S. entertainment. While there were earlier expectations of a negotiated end to the trade war, many now believe that China will avoid appearing weak and won't back down quickly. Some experts suggest China might seek to weaken the U.S. economy before entering negotiations in order to bargain from a stronger position. Asian and global markets have been reacting to these developments all week. It's been a volatile period. Most Asian markets were closed today, but Japan's ended the day down about 3%. Taiwan, which saw major losses earlier this week, managed to rebound slightly. The sell-offs haven't been as sharp as earlier in the week, but market swings have been significant.
We will continue to bring you new updates as more information becomes available. Stay with us for latest updates.